right here at the NYSE, they're stepping up an effort to help companies essentially get short-term funding, more immediate funding. New York Stock Exchange bought minority stake today in the Receivables Exchange. That's an online marketplace for businesses to essentially get cash more quickly by using their receivables as collateral. That way they don't have to actually wait for the customers to go pay their bills. It's an important thing when you're running a business. You know it usually as factoring, but you're about to speak to a man named Nic Perkin, president, co-founder of the Receivables Exchange. Your exchange essentially made the factoring business more quickly and more widely accessible by more small and medium businesses. Today, what does this partnership with New York Stock Exchange do for you?
Well, it does a number of things. Obviously, we're partnering with an iconic brand. One of the preeminent brand of capital markets in the world. So from our standpoint, we are a growing new capital market, originally for small, medium companies, and now for large corporates with the CRP program with NYSE. So obviously it's going to have a big increase in terms of our volumes, but obviously the reputational impact is tremendous and accretive to us as well.
Now you talk about the receivables market being about $17 billion. What portion of that do you have?
Well, actually trillion with a T. And we actually are still relatively nascent in terms of the 17 trillion market size. We're approaching about $1 billion on the SMB side. And then the CRP is actually launching today with NYSE, so that's a multi-trillion-dollar marketplace. We expect to penetrate it aggressively, so it's going to be an exciting time.
Now, when you were launching this, the concept was it was taking businesses a while to essentially get paid, to get cash that they need to keep going. Are you seeing more tightness on the corporate level? Why did you see this expansion as an opportunity now?
Well, we saw it as an opportunity to bring a transparent electronic marketplace, a capital market for short-term working capital, both to small and medium companies and to large corporates. Obviously, the access to capital for large corporates and small companies has been an issue over the last several years. And so we believe that as a mechanism for accessing short-term working capital, the true sale, which is an off-balance sheet transaction, the true sale of receivables is a fantastic balance sheet management tool and is a very efficient way to get market-priced capital.
Mm-hmm. So explain, I guess the closest parallel is sort of like commercial paper markets, short-term funding. Right, for a company, day to day. What are the competitive rates like, and who's on the other side? Who's actually doing the purchasing?
Hedge funds, banks, any sort of institutional capital is deploying capital into our marketplace. On the rate side, it's really market-driven. So whatever it's obviously tied to the risk of the business. Large corporates, lower risk, lower yield. So it would be a LIBOR spread transaction for large corporations. For small companies, obviously, but there's some very low-risk small companies as well. So you can see very low rates for small companies, but you can also see high rates for small companies. It just depends on the risk.
So it's interesting. You have hedge funds and sort of the big guys on Wall Street helping to provide immediate funding to small, medium businesses.
That's right. Across the board, large corporates as well as small medium companies.
All right. Thank you so much for explaining your business and for coming out to talk about this new opportunity with the exchange today.